Filing personal taxes can be super overwhelming. However, by having the correct information and documents ready to go, it can make the process so much easier. In today's video, I'm going to be going over the key documents that you should gather to help you get ready for your tax filings. Additionally, I'm also going to be showing you some tips and tricks on how to make this process as seamless as possible. Hi, welcome to my channel. My name is Irene. I'm a CPA here in Canada. I post videos explaining important accounting and tax concepts using simple language to help Canadians better understand accounting and taxes. Make sure you hit that like and subscribe button for more. Before I get started, I want to preface the video by saying that Canadian income taxes is a very extensive topic. I'm going to try to keep this video very concise because I don't want to information overload anything. If you have any questions throughout the video, please feel free to leave it in the comment section below. So the first set of information that you need is your personal information. So this includes your name, your date of birth, your SIN number, your address. If you have a spouse or a common law, you're also going to need to provide their name, SIN number, as well as the net income for the year. If you have any dependents, you also need to provide information on that, so their name, date of birth, SIN number. It would be very helpful to have a copy of your previous year's tax return that was filed. This will be a really good point of reference for whoever is preparing their tax return in the current year to make sure that if there was anything that was reported last year, it'll trigger for them to pick it up again this year. Some other documents that is your personal documents that could be found on CRA Online is a copy of your notice of assessment from the previous year, any CRA installments that you've paid to date, and any other CRA correspondences that you received throughout the year. If you are getting somebody to prepare your tax return, they will likely get you to sign a CRA authorization form, which will allow them access to view your CRA online information directly. So depending on your unique tax situation, you might need various different documents. The next section below is going to be broken down into different scenarios. So if you had the scenario that applied to you, you're going to need these documents. So if you were an employee sometime during the year, you're going to receive a T4 slip from your employer. You can expect to receive the slip by mid-March because your employer has up until February 28th to file this for you. If you receive tips during the year, tips are taxable in Canada. Therefore, it is your responsibility to report the tips that you received during the year, even though it is not reflected on your T4 slip. So the next section is going to be if you had investment portfolio. Please note we're only talking about taxable investments, meaning the investments that are not held in a registered account. So we are not talking about the investments in your TFSA, RRSP, etc. If you received investment income, you'll likely receive a T5 slip. This would include your dividends, interest, foreign income, etc. You'll likely receive the slip before mid-March as well because your issuer has up until February 28th to issue the slip for you. If you received income from a family trust or like an ETF, you're going to receive a T3 slip. Depending on your investments, you might also receive a T5013 partnership income slip. Both the T3 and the T5013s, you can expect to receive these by mid-April because the filing deadlines for these slips are March 31st by the issuer. If you're expecting these tax slips or if you're not really sure, it's always recommended for you to wait until you have all the slips available before you file your personal taxes. If you sold investments during the year, you should get a copy of the realized gains losses report. You probably would have received a T5008 slip for the dispositions, but it's better to refer to the realized gain losses report issued by the institution. Please note that you're only going to report the gain or loss from your realized transactions, meaning the transactions in which you sold. If you didn't make any dispositions and you have unrealized gains losses report, there is no tax impact on the unrealized portions. So another document you're going to need if you have a investment portfolio is management fees paid during the year. So if you paid somebody to manage your portfolio, your taxable investments, you'll likely receive a summary of all the fees that were paid during the years. You can also write that off as well. If you took on debt to fund your investment portfolio and you paid interest on the debt, then you can also write off that debt because it's the cost of borrowing. And now with cryptocurrency, you're not going to receive any tax slips for that. So it's really up to you to keep track and for you to report your crypto transactions properly and correctly to the CRA as part of your tax return. Click here if you want to watch a video about how crypto is taxed in Canada. So this next point is really important that I think that a lot of Canadians are not aware of. So if you have any specified foreign property that you held during the year, that had a cost of more than $100,000 Canadian, you are required to report this on Form T1135, Foreign Income Verification Statement. So this would include your foreign stocks, your foreign real estate, etc. Please note that there are really hefty late filing penalties on this form if you do not file on time or don't file at all. So if you are self-employed, meaning that you have an unincorporated business and you're operating as a sole proprietor or even a freelancer or contractor, you are responsible for reporting your business income and business expenses. When you go to file your personal tax return, you only need to report the total amounts. The details and the information is for you and your responsibility to keep records of, as well as receipts for 6 years so that in case CRA comes looking. However, when you initially file your taxes, you don't need to provide all those details. You'll report all of your business income and expenses on Form T2125. If you're not sure what business expenses you can write off, click over here for my video where I break down 14 different business write-offs. So if you're getting your tax return filed by like a CPA, I highly suggest you have all of your information very organized and provide them a really nice summary. With a very clear and easy to read summary, this will help your CPA file your taxes in a very efficient manner, which will in turn lead to you having a smaller invoice from your CPA. If you're asking your CPA to help you do the bookkeeping, sometimes they don't even do it because their hourly rate is so expensive that they won't even take that task on for you. And in some instances, if you have some sort of contract where you might actually get a T4A slip, if you have a rental property that you rent out to others, then you will need to report the rental income and expenses. So similar to self-employment, you only need to report the total rental income and expenses on your tax return. You're going to report that on Form T776. If you're not really sure what kind of write-offs you can claim for your rental property, click here where I break down various different rental write-offs. And so again, it is up to you to keep the receipts for 6 years as well as the supporting documents and information in case CRA comes looking. And then again, if you're getting your taxes filed by a CPA, please make sure to give them a really easy, clean summary of your rental income and expenses. Oftentimes, the CPA firm will have a template for you to fill out. Having all of your information organized will help the CPA file the taxes much more efficient, which will ultimately benefit you. If you have multiple rental properties that you personally own, you have to track each of the rental properties' income and expenses separately. So if you are a senior citizen, depending on your age, you might receive a T4 OAS, Old Age Security, and or you might receive a T4 AP, which is for the Canada Pension Plan Retirement Benefits. Now for RRSPs, if you contributed into your RRSP, you'll receive a contribution receipt that you will need to report on your tax return. If during the year you withdrew money from your RRSP, then you'll receive a T4 RSP slip, or if you withdrew money from your RIF, then you'll have a T4 RIF. So for students, if you went to school during the year, you'll receive a T2202 tuition enrollment certificate. This is an official statement for income tax purposes, and you can download this from your school's website. If you receive scholarships or bursaries, you might receive a T4A. Sometimes these are not taxable, but you'll still get a T4A slip. If you are repaying student loans, then you'll be able to report the interest paid on your student loans. If you made donations during the year, you can claim that as a donation tax credit. However, it must be a donation made to a CRA registered charity. If it was a donation made to a random organization, that is not going to be eligible. If you want to check whether the organization is a CRA registered charity or not, you can go onto the CRA website to check. If you are somebody who made a lot of donations during the year to CRA registered charities, then it is up to you to keep the receipts and to keep a detailed ledger of these amounts, because you're only going to be reporting basically the total on your tax return. So if you have medical receipts during the year, then you may be able to claim it. Medical expenses can be claimed as a tax credit if you meet a certain threshold. Assuming you meet the threshold and you have a lot of medical expenses, again, it's up to you to keep them organized and keep the receipts on file. Please note that these are all CRA hotspots, meaning that CRA often reviews these, and it will be up to you to provide them with the support. If you have children and you paid for childcare expenses, you may be able to write it off. Please note that there are eligibility requirements that you need to meet. However, these could include expenses paid for a nanny, daycare, etc. So again, there is still so much on about this topic. However, I tried to make this video very concise and I tried to limit it to be, beginner friendly. If you have any questions at all, please feel free to leave a comment in the comment section below with your question and I'll get back to you. Thank you so much for making your way into the very end of the video. Make sure you hit that like and subscribe button for more. Over here, YouTube thinks that you're really going to like this video, so I will meet you there.